here we are with Sandy Peng, co-founder of Scroll, one of the biggest Ethereum Layer 2s. Layer 2s have been one of the biggest trends growing in the past year or so. They definitely were the biggest trend of 2024. Scroll was one of the most anticipated L2s to come to mainnet. And so really excited to have Sandy here on the podcast to discuss all about it and future plans as well. So Sandy, welcome to the Defiant podcast. It's great to have you here.
Thanks for having me, Camilla. It's been a minute since I've been on Defiant. Definitely, I think the world has changed a lot, and Scroll has evolved quite a bit since the last time we were here. I think we were first here when we were just getting started, and then that was when pre-mainnet, and we were talking mostly about the tech side of the differentiation, and I think we've certainly come a long way from design to engineering to now more of like ecosystem and builder focus build out. It's been a really exciting journey where we're learning a lot and evolving a lot as founders and as an org. So super happy to be here and share what we have in store for 2025.
Excited. Yeah. I think first podcast of the year. So it will be a good one. All right. So let's just get started from the beginning. I'd love to hear the founding story of Scroll. What first with your background and what led you to start this Layer 2?
Yeah, so I've been in the crypto space for a really long time as an investor and getting more and more involved in early stage projects. And so Scroll was kind of started about 3-4 years ago, and the catalyst was on the external side, a lot of the ZK open source primitives and tools were getting ready for production, and so the Zcash team and Starkware team and ZK Sync team, there's a lot of very exciting kind of development in the ZK space as a whole. And the second catalyst was, I think we saw a huge opportunity in building a kind of ZK rollup that is, we saw the future where we could build a fully verifiable and completely EVM compatible Layer 2 using this nascent technology, and this would lead to a lot of different things that we see now, but we didn't see when we started off building this project. And so I think our vision about kind of like the Ethereum roadmap and also how all the L2 centric roadmap ties together have evolved quite a lot, and also our learnings from operating a chain, from something that required a lot of requires a lot of testing when you're building out the whole thing at a bytecode level, end to end, and also rolling out, kind of rebuilding the ecosystem from a place where the chain is evolving, and then also the entire kind of ecosystem space is evolving. And I think we kind of got a lot of early support from the research community, and then we started ramping up our engineering team, and then we started kind of building out the ecosystem of various founders, and onboarding a lot of projects onto Scroll. And but the founding journey is kind of one of Ethereum enthusiasts and people who are ZK researchers and also engineers kind of coming together and kind of trying to build something cool and build something that people would use.
Great. So you came to Scroll through doing ZK research and being part of the Ethereum community?
So I was investing prior to Scroll, and I got deeper into the kind of the research rabbit hole, and through mutual friends met the current co-founders. Action.
Right now, there are basically two camps in the Ethereum L2 space, optimistic rollups and ZK rollups. Why did you decide to go the ZK route?
I think ZK is newer technology, and the part of the catalyst of starting Scroll was that we saw a kind of a fast maturing of the ZK tech stack, and we saw we were getting very close to the moment of being able to build out entire kind of ZK VM systems super quickly, and also getting to a stage which we're very close to being kind of real time proving, and that means like instant settlement, and that unlocks a whole new other kind of use case of payment and seamless exchange on-off ramp and more connectivity and more interoperability between different chains. I think we saw a future where, let's say obviously every blockchain starts to kind of with a choice on the blockchain dilemma. Like, do you, you just can't have all three. And so which one do you forego? And with ZK, you're kind of using mathematics to kind of expand the scaling vector without changing the decentralization and security vector. And when that scaling vector and also the finality vector gets like scaled to a certain part, I think that there is a future where there can be multiple kind of chains, multiple L2s in the Ethereum space, and with a very seamless and interoperable experience. And I think that future is maybe like 2 or 3 years away. But with these kind of longer term predictions, it often happens like a lot faster than we expect.
So obviously there are many L2s out there, both in optimistic rollups and ZK rollups. So how do you want Scroll to differentiate versus, I guess, like specifically ZK rollups, but also more broadly? Like, what does it bring to the table that's unique?
Yeah. So I think the moat remains very high to build a chain with original design. So it requires a novel kind of framework and a novel architecture and maybe chain design philosophy as more things become more modularized. And on the other hand, it requires a very high level of execution capabilities. And I think we will get to a stage where we increasingly see chains becoming more specialized for certain business use cases and adapting to that particular use case. I think some of the more successful chains from the past, whether they are L1 or L2, have adapted to the predominant use case. So Tron, for example, was first to pioneer the gasless experience because stablecoin use case was proliferating. And so that is an example of a chain tech adapting to the use case. And I think going forward, and I think for Solana, trading experience is, and also some of the end user experience, the mobile first experience is fantastic and almost kind of unparalleled from any other chain. And that gives it a unique advantage for certain types of trading activity and discovering different tokens. And there's a lot of things that comes with particularly that type of design. And I think how L2s will differentiate going forward is what use case you're doubling down on and what you're seeing traction in, and then adapting the chain to that. And so to be able to do that, you need to kind of be in a position to discover a business use case, of which I think, there's a big world out there, and there are a lot of undiscovered use cases. And then you need to be able to kind of build a chain and adapt to that particular use case. So for the, arguably, I think some of the a more exciting one of the more exciting but often like neglected chain designs that came out of last year, in my opinion, it's actually Blast. I think they did forego some security principles, but fundamentally it's a really interesting design for the on-chain community who cares a lot about yield. And this is like a yield optimized and UX optimized design for a particular community who are like yield chasers. And I think Hype is also really interesting because it focuses on one particular use case, which is the perp trading experience. And the chain is also very, very optimized for this particular use case. And they're kind of making very drastic trade-offs that you wouldn't necessarily think is suitable for a general purpose chain. So I think going forward, the kind of the general purpose chain, the era of building out a general purpose chain is probably over, and being able to adapt and discover a use case and having the ability to kind of redesign the chain or add new chain features to enable more building activity on the chain, and also curating a very helpful and also encouraging founder journey experience where we encourage founders to be aware of infra tooling availability and also be very, very attuned to user behavior and also like business opportunities. I think that is the kind of the chain environment that will ultimately succeed in the next year or so.
So yeah, there's been a transition from general purpose chains and layer 2s to more use case specific chains, and some successful examples are Blast and Hype or Hyperliquid. So with Scroll, what would you want that a specific use case to be, or are you building towards one specific use case?
I think general purpose chains such as like Scroll and Solana starts off with a technical design principle, and the use case is coming from a place where you start off with a novel and also, I think, in our different perspectives, like very unique and superior technical design. And then we try to find use case and founders that can leverage this tech stack. And the value proposition for Scroll is that it's incredibly secure, incredibly decentralized, and it's getting to a stage where the cost is becoming negligible for the vast majority of use cases. We're getting towards subset transaction cost, which is negligible for anyone paying for coffee or anyone paying for their daily activities, and then also with finality becoming shortened to the minutes and very soon to the sub-second category within like a few months. I think that unlocks a lot of automation, a lot of things that requires a very high level of security, and things that requires imagine a future where your assets are managed by AI agents. It's very optimized for transfer time between chains and value discovery between different blockchains. And I think those are the really interesting things. And as the chain build out team, we're going to be adding more precompiles and more features as more founders kind of focus and hone in and find traction in different kind of walks of the chain, the business case.
The Stellar Development Foundation's Build Better campaign invites you to transform your innovative ideas into real-world blockchain solutions. Whether you're a seasoned developer or simply curious, this initiative offers a platform to create applications that enhance financial access, creativity, and connectivity. Join a global community of builders and contribute to a more inclusive future. Visit betteron.stellar.org to learn more and participate. Makes sense. So the use case will come from builders and founders on the chain rather than from yourselves. And you were saying that some of the value propositions from Scroll are high security, high decentralization, and very low cost. You're saying that you'll get to sub-cent cost per transaction in 2 to 3 months. Mm-hmm. And okay, so in the security and decentralization aspects, what exactly makes Scroll's features in these two qualities better or more competitive than others?
Yeah, I think we have our own interpretation of what high security standards mean, and we're going to be publishing a number of articles to describe the things that we've done to make sure that the highest standards are being adhered to. And a lot of this comes from design principles. And when you're faced with a lot of chain design options, we tend to pick a more secure option. So most of the time it is a matter of trade-off, and most of the time it is a matter of being more transparent, more open, and more disclosure oriented, and getting more external parties as checks and balance. And so things like having a security council, things like getting to stage 1, these are all kind of industry signposts that exist to kind of signal security standards from a use. From a dev perspective, like uptime, reliability, like having no reorg, these and having having operated a secure chain for a certain amount of time. So we've been operating the main chain for about 15 months now with no security incidents, and also just kind of having incredibly high uptime and reliability, and that creates a very helpful and healthy environment for DeFi projects to flourish, and it provides a good kind of DeFi experience from a kind of accessibility and a usability perspective.
And from the decentralization standpoint?
From a decentralization standpoint, we rely on Ethereum for decentralization, and so any L2 that settles on Ethereum is as decentralized as the L1, and we're also kind of building out more decentralized features such as decentralized provers, which will be live at some point in 2025. And we've launched a security council, and part of our token launch is about decentralizing ownership and having more decentralized, like geographical decentralized, like community ownership, and all of these things are different like layers and parameters of decentralization, and also most of it is about having like policy oriented things where nothing, there isn't a single point of failure, and just kind of double checking that, there isn't any kind of particular blockers where, one point of failure would impact the entire system.
In terms of the sequencer, how important do you think that is to having a decentralized L2, and will the scroll sequencer, like what's the architecture for it?
So currently we have a centralized sequencer, and I think there are multiple things that can be decentralized before this becomes a priority, and so it is possible to be decentralized, and I think we're publishing an article this week comparing the different kind of types of decentralized sequencer designs. But I think that's not the only and not the be-all and end-all hallmarks of decentralization. And decentralization is obviously a gradual process, and no chain is quite as decentralized as Bitcoin. And to get there, it takes many, many years, and it is kind of it's a gradual process.
Besides the sequencer, what do you think are kind of the pillars for having a decentralized layer 2 that people should look out for?
I think there are multiple things. I think one is that, I think some members of crypto Twitter can be very particular about the definition of L2, and so if it settles on Ethereum, then the level of decentralization is equivalent to Ethereum, which by most like institutional means, this is like sufficiently decentralized, and on the L2 level, there are multiple things the team can do, but all of I think the decentralization is something that compounds, and something that will increase and improve with time. So the longer the chain is operated, and essentially the more decentralized it can be.
L2's building on Ethereum get Ethereum security, but like having a centralized sequencer maybe degrades the degree of decentralization, right? Because if you have a centralized sequencer, then there are, like you mentioned, there's like a single point of failure, or ways that a chain can be stopped or censored.
From an asset safety perspective, a centralized sequencer doesn't have any impact on that. And so, like, your assets are secured by Ethereum L1, and regardless of what happens to L2, like, your assets are safe. Like, I think regarding the decentralized sequencer, there is like a kind of an efficiency trade-off. So the more decentralized you are, the less kind of efficient you are. And it's just like a sliding scale. And the community, you can be super decentralized but completely unusable. And or you could, be more on the as usable as possible scale, and while being as decentralized as possible. So it is kind of a fine line to tread, and some of these decisions, we will be kind of moving these decisions to the governance forum to kind of figure out what the community needs in terms of like how cheap and efficient the chain is versus how quickly they want the decentralized process to be.
And right now, who controls the sequencer?
Who controls the sequencer? So it's operated by the team, by our engineers, but it basically runs. So whoever the control of it matters less, because the assets are staked on Ethereum L1, and there is a security council of, I think, 13 people who holds the upgrade keys, and that essentially kind of acts as a fail-safe in case of any kind of touch wood catastrophic events.
Okay, and then speaking of decentralization, you mentioned one aspect is the token, which you recently did an airdrop, and I'd love to talk about how the scroll token is used, and also about aspects of your airdrop. You did this kind of points like campaign, and it was a little bit controversial post airdrop, like the community reaction. Some weren't very happy with the outcome of the distribution. So, and I've seen this happen more and more after airdrops, that communities around projects become disappointed with how much of the token was distributed. There's also the question of airdrop farming and how that plays a role into it. So lots to discuss in terms of your airdrop, but let's just start with the scroll token, and I'd love to get a better understanding on how it's used in your ecosystem, and then we can talk about the details of the airdrop.
Well, the scroll token is used as a it's a means of exchange. So you can use it on dexes, and you can use it in most of the lending protocols on the Scroll ecosystem. So you could think of it as like a tool of which you can interact with some of the projects on Scroll. And secondly, you can think of it as like kind of a governance voting mechanism. So there are numerous delegates on our governance forum who stands for different issues, and delegating your Scroll token gives them voice and power to decide on important issues such as resource allocation and also future technical roadmap eventually.
Mostly for governance, right?
Governance, and also there are use cases within the ecosystem. So you can use it in lending, borrowing, or in dexes. Very similar to most kind of other ecosystems where the native token is used as a means to exchange.
So who can participate in governance, and what specifically is decided in those forums?
So we're still in the process of putting together the governance forum, and there's still a call for delegate process ongoing. And we're also in the process of encouraging more Scroll token holders to stake their token. And so that is in the process of being set up right now. So we airdrop Scroll tokens to almost 800,000 wallets. And in terms of the sheer number of wallets it's airdropped to, is absolutely massive. And there hasn't been one quite so widely distributed in quite a while. I think when you cover such a large number of users who've interacted with, or rather than users, I would call it like wallets that have interacted with the chain, it's very, very hard to, make everybody happy. And we did our best in terms of kind of thinking about like the project allocation and thinking about, who are the contributors that we need to give thanks to. So we airdrop to a lot of open source repos, ZK researchers, people whose like technical contribution we stand on the shoulder of. And we also airdrop to over 100 local communities who have hosted Scroll meetups over the last 2 to 3 years. And those are mostly grassroots communities who have been kind of studying Scroll and also kind of building on Scroll. And then there's obviously also the on-chain component. Anyone that have interacted with the chain, staked or bridged or participated in some of the projects are part of the airdrop too. And so that's a very large number of people, and we're trying to make sure that people can, but now we also have people who have kind of bought Scroll tokens through various exchanges, and we're in the process of kind of setting up the governance process and encouraging more of these users to be active participants.
Do you have to stake to participate in governance?
So there is a guide on our website where you go on scroll.io and governance, and then you'll be taken step by step on how to participate. But you need to delegate, or you can self-delegate, or you can delegate to one of the delegates who are standing for particular kind of issues. So you could think of this as kind of like a representative democracy, where you can stand for office yourself, or you could have elect somebody else to represent you on this forum.
How can people become delegates? Is it like by a minimum token amount required, or do you have to be elected, or how does that work?
Well, so right now it's a permissionless process, and there isn't a barrier to entry. But where you are ranked on the governance forum in terms of UI, it is impacted by how many SCR tokens you have staked. So as you can imagine, but most of the delegates are still in the early stages of gathering votes. So there's a lot of opportunities, and SCR holders can also like restake depending on new participants that enter the ring. Right now, I believe the largest delegate is L2Beat, because they've been very active and they're also a very early participant in the governance process. But I would say anyone is welcome to participate, and it's also wide open because I think the rankings have moved quite a bit every time I check.
The wait is finally over. The Impossible Cloud Network node sale is live. Visit node.icn.global now to purchase a node and start earning rewards. This is your chance to join the movement standing up against the cloud giants. Impossible Cloud Network's ecosystem already has 1,000+ customers and 3 million of ARR. As we speak, it's disrupting the fastest growing trillion-dollar industry. Visit node.icn.global to secure your place in the future of the cloud. Yeah, going over the airdrop, which, as you mentioned, was very widely distributed, over 800,000 wallets, is huge. And just looking at the distribution, there will be 15% of the 1 billion SCR tokens for airdrops, and looks like 7% of that 15% was for this first initial airdrop. There's 35% for ecosystem and growth, 10 for the Scroll Foundation, 23 for Scroll contributors, and 17% for investors. Just to clear up, who represents Scroll contributors? Are these kind of the local groups that you were mentioning, or like who exactly are in that group?
Scroll contributors, it does include that group, and it also includes some of the core contributors and also some open source contributors and some of our advisors.
During the aftermath of the airdrop, a lot of the criticism was focused on 5.5% given to the Binance Launchpad. Is that where in the like distribution did that come from? Why do you think the community was so upset about this, or what's your take on this? Like on your why did you decide to place this allocation to Binance? And your thoughts on kind of some of the community reaction to this?
I think there is a common misconception that the Binance launch pool allocation impacted the airdrop allocation. So the 15% allocated to airdrop, all of it, it goes to community members, and of the various buckets that I talked about. The Binance launch pool is coming from the growth bucket, and that's always earmarked for a separate use case and means of distribution. The reason we wanted to, so first of all, kind of. The launch pool is a very established product for establishing initial liquidity for the token launch time. We weren't the first participants, and we won't be the last. It's an access and a gateway to 200 million centralized exchange Binance users around the world. And one of the key reasons we are doing it is also because we've heard feedback from a lot of our builders, particularly in emerging market, that this is something that they desperately need in order to launch a product. The Binance P2P market, as well as stablecoin market, is something where a lot of the stable dollar access flows through, and while the on-chain participants, which are mostly living in established markets, are much less reliant on centralized exchanges. And so it's often it's possible to neglect the fact that, when you're in emerging markets, centralized exchanges, particularly Binance, has a huge utility when it comes to on-off ramp. And without that support, that is a real blocker for a lot of our ecosystem founders and communities to get access to continue building on Scroll, essentially. And then so I think, and then also the launch pool is a means of getting wider distribution. So the on-chain community, compared to centralized crypto community, is still relatively small. It's a growing and very vocal and also very sophisticated community. Having a mixture of different types of holders and users is stereotypically very good for the healthiness and the wide distribution of a token generation event. So I think in terms of kind of widening the types of ownership, and so that people act differently and behave differently, and in terms of like distributing variety, and in terms of distributing more widely, particularly in the emerging market, I think centralized exchanges to this day still provides acts as a very helpful and healthy conduit.
Absolutely. I think some of the criticism came from just comparing the total amount that was allocated to each group. So 7% for the airdrop and, 1.5 percentage point less to just Binance. So I think, I don't know what your thoughts are there on the cost to list tokens on Binance. Do you think it's worth this amount given to an exchange? Maybe there needs to be more competition in centralized exchanges to just like lower the cost to list. As a project founder, how did you find this kind of SEX listing process to be?
So to clarify, the 5.5% doesn't go to Binance, the exchange. It is distributed to centralized exchange users, and of which there are many of them. And there is a cap to how much each account can receive based on their staked amount. And so I think we try to kind of make the on-chain component. We added like kind of various metrics to kind of make sure the on-chain component is also very well catered for. But overall, I think it is, it's just a commercial decision, and it is I think for the kind of the utility and the distribution it provides, I think it's a reasonable composition.
Do you think for like the 8% remaining in this 15% airdrop pool, what are the plans on like how these tokens will be distributed?
So we will be announcing rules about the new the what we call session 2, where we'll be distributing the remaining 8%, and we will be tweaking the airdrop rules a little bit, and but the goal will remain the same. One is like kind of encouraging kind of builders to build on Scroll, and 2 is to make sure that we drive value to the end users who participate and engage with these protocols on chain.
What are some of the main lessons, if any, from this first airdrop?
I think some of the lessons is around, I think if we had to do it again, we would maybe think about kind of concentrating our efforts on fewer sets of users rather than having it so widely distributed. I think part of our thinking was that we wanted to make sure that as many people have access to this as possible. But what we couldn't anticipate was, the timing of which everyone people would sell. And so as with the fluctuation of the market, some of these people kind of didn't get what they were hoping to receive. And then I think most people who were kind of staking or participating in DeFi received anything from the range of like 10% to 30% annualized on like a USD basis. And I think that's kind of a whether that is sufficient is also very market dependent. I think the timing of a massive bull run shortly after our airdrop resulted in the fact of a lot of kind of retrospective dissatisfaction, and also I think we could have been clearer about communicating some of our design principles. We were relatively quiet prior to the airdrop, with the hope of making sure the airdrop is delivered as a surprise and is executed well, and people can celebrate and enjoy the fact. So I think these are the 3 things that I would probably could have done differently if I get to do over again. But I think I think what founders should know is that there will be lots and lots of like unexpected things. Airdrop is kind of like a one-off event in this like very long grind of entrepreneurial journey, where there's a lot of visibility for good or the bad, and but in terms of the on a longer horizon, I don't think it has like a huge impact. And I think there are ways to there are ways of which to do all of these things, and the whole space is still fundamentally very experimental, and I think focusing on delivering value to the end user would be something that that chain can do much better in conjunction with certain protocols, because certain protocols require different user behaviors.
Yeah, some of these, the lessons go hand in hand in terms of focusing on a more specific and reduced subset of users, which in turn should increase or can potentially increase the return that they're seeing, right? Because I think because of the fact that the airdrop was so widely distributed, the returns were less because there were just like fewer tokens to go around all of those who participated. So potentially, in the upcoming airdrops, you'll focus on a smaller subset of like maybe more active users. Do you think, so that the amount of tokens distributed won't be so widely distributed? They'll be more concentrated.
I think another lesson is that we will be a lot more explicit about the rules. I think there were a lot of things that were left to guesswork in the first airdrop, and those people who didn't guess right were left disappointed. And so we wanted to make sure that in terms of expectation management, we're very clear on the forefront about what kind of behavior will be or what kind of user behavior will be rewarded more. So that's another lesson. I think part of the intention is, with hindsight, is that how the ecosystem develops is also something that is hard to predict. So as you're building out the ecosystem and building out the chain, and also there are just so many different voices interpreting our behavior, and it's hard to address all of them. But we will try and be a lot more vocal in terms of communicating, what the rules are and what to expect.
Going forward, and just in general with kind of the airdrops and point meta, how do you think that will change? Or have you seen new trends emerging on token sales or token distribution? I mean, I've seen a lot of talk about like ICO 2.0 era and just doing plain, token sales or just like different token distribution designs. Just curious on your thoughts on this, and whether you'd consider a different type of token distribution in the future that's kind of different from points or not.
Yeah, I mean, I think as an industry, we started off with ICO, and it evolved to a airdrop. So the fundamental difference is one where users pay for ownership, to one where users are one is like where community or users pay for ownership, versus one where ownership is distributed in a kind of a free way, but points create a certain kind of expectation about how much will be distributed. So I think the industry is swinging perhaps swinging back to an ICO perspective, but that is also coupled with a background or context of expected US deregulation. So from a first principle perspective, ICO does touch on a lot of very sensitive areas. So when it comes to a collective investment scheme, how many people can realistically own ownership in a privately held company before it is disclosed as a security? All of these issues are previously, kind of avoided by entrepreneurs for better or worse. And then we like to err on the side of caution and make sure our users are, can receive ownership for free as opposed to being offered for a certain price. I think that is just like the choice of every entrepreneur regarding what risk they want to take. Obviously, on our side of the bench, we take the risk of, community pushback because they didn't get what they clearly, anticipated. And but there will also evolve to be ways of resolving that issue. So I think both are very interesting ways of experimenting with this, decentralizing ownership, and the end goal is the same. And I think the how and the process, a lot of it depends on the risk the entrepreneurs want to take, and also the prioritizations. But I think I would be equally, if I were a user, I would equally be happy kind of, receiving stake in a protocol that I use versus kind of investing in it.
Get about 20% APY on ETH with the High Growth Vault by Kelp in one click. Highgain uses blue chip DeFi strategies with RSETH across Aave, Pendle, Usual, and Elixir, managed by Strategy Pro's Ultra Yield and Upshift to deliver highest rewards on ETH, all in just one click. Deposit your ETH, receive HGETH, and stay liquid in DeFi. Trade or use HGETH on platforms like Pendle and Balancer while still stacking rewards. Follow along these steps to get started. Yeah, so definitely regulation is a big key in this discussion on whether to sell tokens in a kind of ICO type mechanism or distribute them for free. And yeah, you're right. I think founders have avoided selling tokens because it does bring out the risk of whether the token will be considered a security. And maybe now, there's so much optimism on the new US administration and what that will mean to crypto regulation, that maybe the ecosystem is changing because of that expectation that, there will be more clarity in terms of what is a security and what's not. But yeah, super interesting trend to watch. And yes, speaking of trends, wanted to talk about a couple of, L2 trends. One is this idea that became very strong last year, where there was so much activity happening on Ethereum Layer 2s, and not a lot of that was being reflected on the ETH price, because since, the activity wasn't happening on the L1, all of that was, it wasn't driving any ETH burn or a purchase of ETH to pay for gas and so on. It was like most of it was happening in the L2 level. How do you think that will continue to progress this year, and your thoughts about this narrative of Layer 2s being parasitic to Ethereum?
I think the layer 2 versus layer 1 debate is a relatively smaller issue when it comes to price impact of Ethereum versus a much larger question. So I think the larger issue is that the ETH to Bitcoin ratio, so ETH have been underperforming compared to Bitcoin. And I think part of the reason why Bitcoin is overperforming is that the roadmap and the deflationary nature, and there is a very clear cyclical nature of Bitcoin that's repeated every 4 years, centered around halving, is something that institutions and most kind of Bitcoin users are used to. So that swing is playing out, with the, unless the US declares, Bitcoin becomes national reserve or anything that's like policy driven. So barring any kind of, US related major policy change, the Bitcoin cycle has become super predictable and super well understood by institutional players. And also it is Bitcoin is deflationary, and all of these issues means it's been, and then also in terms of Bitcoin's positioning as digital gold is becoming clearer and clearer. And so that has been resulting in kind of acceptance by institutions around the world. I think with the issue with Ethereum, I think it's gone through various positioning as ultrasound money, as the decentralized computer, as a means of I've heard different versions of Ethereum positioning from different members of the community, or Ethereum as sound money because it's a means of exchange as well as a store of value. There have been different versions of the Ethereum pitch, and overall, it's landed in a place where it's not as succinct and not as well understood by institutions, which have been the biggest kind of flow of capital flow into crypto this cycle. I think the L2 impact of Ethereum pales in comparison to this bigger trend, and And I think in terms of whether L2s are parasitic, I think L2 is a super smart way for Ethereum to gain more mindshare and decentralize some aspect of ecosystem building and promoting the Solidity language and engaging with developers everywhere. The call to action for L2s to become a de facto kind of a BD or ecosystem building arm for Ethereum is super strong. And but regardless of whether this experiment is going to play out, I don't think there's been a lack of activity on Ethereum L1 at all. But whether that amount of activity on Ethereum L1 is going to result in ETH being like inflationary and deflationary, I think that has a much bigger impact on the price direction and certainty for institutional adoption. But that's just my 2 cents. And I think the fact that we've seen multiple versions of MicroStrategy for Bitcoin, in Japan, in US, and in Canada, but we haven't yet seen a proper one for ETH yet, is related to the fact that ETH is still potentially inflationary, and that's kind of has an impact on whether these vehicles can kind of catch become the TradFi leverage multiplier for the asset. So I think there's a few of these like institutional components that impacts the BTC to ETH ratio, and L2s as a whole, I think, is net value accretive, and you can see other ecosystems such as Solana trying to replicate this with what they call network extensions, which is essentially kind of a cash-up version of Ethereum Layer 2. So in terms of the amount of talent and visibility L2s have brought to Ethereum, I think it's still I think it's a net positive on whether L2 centric roadmap as a whole plays out. I think a lot of it depends on in the next 2 or 3 years whether there could be a more interoperable cross-chain experience, and whether L2s can become kind of sufficiently decentralized, and I think there is a version where this grows in a very healthy way as Bitcoin becomes more and more kind of US centric and US institution centric in terms of ownership, and Ethereum and plus the L2s can offer an alternative to that future.
Super interesting. If you had to pick an Ethereum narrative or value prop like Bitcoin's digital gold, I know you mentioned like different versions of this for Ethereum. What do you think it should be?
I like the idea that Ethereum is programmable, and the idea that it is also the EVM is also now the common language for on-chain dApp building, and I really like the the garden analogy, as in anyone can join this open source community and sow and be rewarded. I think these are all super powerful imageries and narratives, and I like the fact that in some sense, it's very good that different narratives proliferate and different people can contribute their version of what works. But I think, there is a different perspective where, okay, so there isn't a single narrative that is really resonating with institutions. So institutional adoption is lagging, but, that precisely positions Ethereum as a counter position to where Bitcoin is squarely headed, which is, there is a future where maybe the vast majority of Bitcoin will be held by a US listed company or by multiple US listed companies, and everything is, sanctionable, and everyone will no longer, use Bitcoin in the wild, so-called, and we'll just use like wrappers or replicas of Bitcoins. And if Ethereum, through its L2s, can offer something that is equally kind of UX friendly, so gasless experience and with payment adoptions everywhere, but without that risk of concentration, I think that is a very strong counter positioning, and Ethereum can continue being the place for for developers and the place where people can interact and transact. So I think the analogy that I like that resonates with me the most is the idea of an open economy. The idea that anyone can build on it, anyone can transact on it. It's sufficiently decentralized and permissionless, and there isn't any foreseeable risk in the future where there would be anything that would act against this. And there are multiple voices and multiple leadership within the Ethereum ecosystem that can contribute their interpretation. So I really like I really like the slogan of open economy, and I think part of our the Scroll's growth analogy is to help Ethereum continue to build towards that by engaging with founders from emerging markets where they have been previously priced out of a lot of the Ethereum activity, and I think that's where some of the that's one of the core L2's mission. That's like one of the the core Scroll mission is to fill that gap and extend the user base in net new regions.
Super interesting. I like this idea of Ethereum offering a counterpoint to Bitcoin becoming held by US-based institutions, and Ethereum becoming a more global and actually used cryptocurrency rather than one that's kind of bought and held in centralized exchanges or banks or companies. So
it's the open economy.
Yeah. Okay, and then to wrap up, I'd love your view on what's next for Scroll. Like, what are the big milestones that you're working towards in the next few months?
In the next few months, we're launching something called Scroll Open, and that is along the lines of we want to kind of build the open economy on chain, and Scroll Open is a means to encourage founders from around the world to participate in this on-chain hackathon, and we want to be laser focused on creating this founder and entrepreneur experience. What we've learned throughout the last few years of ecosystem building is that there's a ton of technical talents around the world. And what is generally lacking is, particularly outside of the U.S., is the softer side of the founder behavior and journey. Things to do with, how to write good Twitter threads and how to engage in, how to design good UI UX and how to kind of talk to investors and pitch to partners and negotiate things. All of these softer side of the founder entrepreneur journey are harder to share and disseminate when you're somewhat isolated. And so we want to create. So over the last year or so, one of the more popular programs we've launched is something called Level Up, and that teaches building on chain to technical developers, and we had over 1,000 kind of hackathon participants go through this program, and they were part of this airdrop too. And we want to make sure that the softer side of the entrepreneur journey are shared more openly, and we can create a peer-to-peer founder network. So similar to a campus experience where you're learning from your peers as you're going through some of these practical learnings and building a culture of shipping first. And when you're somewhat isolated, or when you live in certain isolated communities without other founders around you, there are certain cultural elements such as, not shipping fast enough and not getting in front of users and being too shy about articulating what you're building and delaying the launch. There's a lot of these common sense things for people who are part of the established startup meta. But, some of the technical founders and also founders we've seen around the world needs a little nudge and a kind of a social push to go in that direction. But in our experience, it's been beneficial for everyone to adopt certain types of kind of startup methodology. There is a reason why certain sets of founder mindset and entrepreneur build out process works time and time again. And we want to make sure the best mentors and also the best builders can help each other and connect. And we want to scale this program up over time. So we're launching the first cohort in the first iteration in early January. So it depends on when this podcast is airing. It might be out already. And I think we want to do a call out for anyone that wants to build the open economy, want to contribute to this collaborative future where everyone can build and own and be a part of this like new city design, whether it's governance, as we face a future that is increasingly uncertain. And this is something that you can genuinely participate in and have a voice in. And we want to encourage a lot of governance related experimentation as well as build out experimentation. And so we'd love for anyone that wants to be a founder to participate in Scroll Open, and anyone wants to test out these products to kind of keep an eye peeled. Keep your eyes peeled on the projects that are coming out of this. There are a number of phenomenal founders that are launching their products in the next few months. And that is partially thanks to or unlocked by the Airdrop process. And I hope everyone can give them a lot of love and support as they come out into the world with something that been building for a while. And hopefully this will kind of be value accretive to the users who use it as well.
In this Scroll Open hackathon, will you be giving out a certain amount of grants, and what's kind of the amount that's being allocated to this program?
Please refer to the official announcement, but it's going to be the biggest program we've launched to date. And it comes with both social as well as like grant support.
How big will the first cohort be?
So that depends on how many applicants there are. So that is still yet to be seen. But I think we're getting a lot of early interest from the communities that we're in touch with around the world, and I'm anticipating I'm anticipating a lot of interest
on these projects that are set to launch in the next few months. Are there any specific use cases that you're most excited about?
There's a lot of use cases that's to do with real world use case and use cases in emerging markets, and there's a lot of projects related to leveraging some of the ZK tooling and primitives that have been built in the open, and hopefully there's a lot of things that your parents and your grandparents and anyone who are previously not in crypto can easily interact with and engage with.
Okay, and then to wrap up, I'd love your big picture vision for Scroll. In the next few years, if everything goes right with the chain and with Ethereum broadly, how will that look like?
I think of the Scroll chain as a city a lot, and with the open economy analogy, we want to be the city where there is the most upward mobility, where there is the best kind of ease of doing business, and people here have the most certainty around their property ownership rights, and this is the place where the best ideas cross-pollinate, and it has the best infrastructure, and people understand the infrastructure will get better and better over time. You will always have the latest technology infrastructure, and this is somewhere where you can settle and build for a very, very long time. So we want to be the place where founders have the best chance of success from around the world, and we want there to be the most kind of talent density as well. So these are some of the things we want to see in the next 2 to 3 years.
Sandy, thank you so much for joining me. It was great to hear from you directly, from your journey and everything that's happening in Scroll and your plans going forward. Really appreciate you taking the time.
Thank you, Kamala. Good to be here. Take care.